Hey everyone, and welcome back to another earnings review. So in today's video, let's touch on TSMC's quarter. Also want to touch on AMD and Nvidia, specific news about those two companies, and touch on Hermes' latest quarterly figures. Of course, yesterday during the ASML review, we did touch a little bit on LVMH. So now we're going to touch a little bit on Hermes, and I'll show you why this stock is extremely expensive, but one of the highest quality names in the market, period. So if you enjoy this type of videos, hit all the buttons, especially the subscribe one. We really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So TSM is up 3.4% right now, pre-market. Of course, when the market opens, a lot of things can change. Year to date, as you can see, the stock is down 22% or so. It has a market cap of $683 billion, trailing 12 months PE of 19.4. And here it tells me that the forward PE is just at 3. But I do think that that needs a little refresh. All right, moving on to the quarter. So net revenue came in at $25.53 billion in the guidance range, and that's down 5.1% quarter over quarter, but still up 35.3% year over year. Gross margin of 58.8%, also at the higher end of their own guidance. That's down 0.2 percentage points quarter over quarter, but still up 5.7 percentage points year over year. Operating margin, about the same scenario here. Net profit margin, also, we're flat quarter over quarter. We're still up 5.1 percentage points year over year to reach 43.1% net profit margin. And return on equity is actually down here. So that's 32.7%, down quarter over quarter, 3.5 percentage points, but still up 7.3 percentage points year over year. Here, if we look at where they generate the majority of their revenue from, of course, still 5 nanometers, 36% comes from there, 22% from 3 nanometers, and that's down a little bit quarter over quarter, and then 15% 7 nanometers, and then you've got all the older nodes. And this, of course, is the magic of having a foundry business, is that, well, you're still generating revenue from nodes that you've made, 10, 15 years ago. I've said the same thing when we're talking about Intel, for example, right? The older nodes are not just going to die off. No, you're still able to generate quite some revenue from those nodes, but of course, the majority still comes from the newer, more advanced ones. Here we can see why they're taking a small hit because of seasonality when it comes to especially 3 nanometers and 5. We can look at smartphones, so that's down 22% quarter over quarter. So yeah, 59% comes from HPC and just 28% comes from smartphone. But automotive did increase 14% quarter over quarter, and then the other category, which is very, very small, increased 20% quarter over quarter. But yeah, the majority is still, of course, HPC, and the smartphone segment is the one that's hitting the business a bit here, especially this quarter, because that's 28% of overall revenue, yet it's down 22% quarter over quarter. Now, as for Q2 guidance, they expect revenue to come between $28.4 and $29.2 billion. Quite a nice increase quarter over quarter. And based on the exchange rate assumption of $1 to 32.5 Taiwanese dollars, they expect gross profit margin between 57 and 59% and operating profit margin to be between 47 and 49%. As for future outlook, so 2025 revenue to increase by close to mid 20% in US dollar terms. While we have not seen any changes in our customers' behavior so far, uncertainties and risk from the potential impact from tariff policies exist. We will continue to closely monitor the potential impact on the end market demand and manage our business prudently. From 24 to 29, management expects revenue compound annual growth rate to approach 20% in US dollar terms, long-term gross margin to be 53% or higher, and return on equity to be greater than 25% through the cycle. So here, still amazing business, best in class, I would say. And so far, nothing really changes in their mind. They also reaffirmed revenue from AI accelerators to double in 2025, CoWoS capacity to double in 2025 as well. TSMC is not engaged in any discussion with other companies regarding any joint venture technology licensing or technology transfer and sharing. So that report about, them and Intel having an agreement, apparently is false at the moment. trying to meet demand as fast as possible. And then there was a report a day or two ago that said that TSM will increase its prices at its USA foundry by 30%. I mean, we've been talking about price increases for quite a while now. With the tariffs, of course, well, this becomes a given. So all in all, nothing much has changed. Still staying the course, still going to invest quite a lot, still expecting a lot of growth, and still, yes, still demand is bigger than supply. So should be good for the overall semiconductor industry. Now moving on to AMD. So AMD also, remember, Nvidia came out first, and then AMD also went down 7% when Nvidia said that, look, H20, we're going to take a hit, $5.5 billion. And I said, maybe the market is anticipating AMD to be hit the same. Well, yes, they did. Yesterday, they came out with basically the exact same thing. And they said that the company expects that the export control may result in charges of up to approximately $800 million in inventory purchase commitments and related reserves. And as I've said in previous videos, China revenue for AMD as a percent of overall revenue is much bigger than Nvidia. Nvidia was around 13%, while AMD is around 24%. Right? AMD last year was $6.2 billion. Of course, the year before that was $3.4 billion. So there is some fluctuation here. And Nvidia, as you know, has increased 70% year over year, but it was $17.1 billion of $130.4 billion. So that's the big difference here. Now, we also had some news today that, well, Nvidia chief Jensen Huang flies to Beijing for talks. According to two people familiar with his travel schedule, Huang met Nvidia clients, including the founder of generative AI startup DeepSeek, to discuss new chip designs for Chinese customers. He then held separate talks with Chinese vice premier, according to one person familiar with the meeting. Okay, one person. Huang said China was a very important market for Nvidia and expressed hope his company could continue cooperating with the country. He also said that, well, this is going to impact Nvidia's business negatively. According to people familiar with the matter, Huang's latest visit to China came shortly after the State Council agreed to a meeting request from Nvidia earlier this week. Huang met with the DeepSeek founder in Beijing, two people familiar with the trip said, to discuss how to design next-generation chips for China that meet client needs and regulatory requirements from both the US and China sides. DeepSeek, an Nvidia customer, in January rattled US stocks when it unveiled a competitive AI model that achieved a similar performance to US rivals but appeared to be trained at a fraction of the cost. Well, that's not entirely true. Moving on to the last part, and that's Hermes versus LVMH. So on the left here, you can see Hermes' latest figures. So leather goods and salary, that was up 10%. So the Birkin bags, overpriced, overrated in my opinion, but okay, you do whatever you want. So that's up 10%. Other Hermes sector, that's up 6%. Ready to wear and accessories, that's up 7%. Watches did take a hit, that's down 10%. Silk and textiles, that's up 5%. And then perfume and beauty, that's down 1%. Now, if we go to LVMH's quarter, you can see here, fashion and leather goods, that was down 5%. Wine and spirits, down 9%. Watches, flat. Selective retailing, down 1%. And perfume and cosmetics also down 1%. Yes, of course, Hermes revenue-wise here, much smaller than LVMH, although market cap-wise, Hermes is now bigger than LVMH, higher margin business. So that's the premium that you're going to pay. Here, if you look at where they generate their revenue, where did they see some growth here in total? Well, all in all, at a constant exchange rate, all in all, they grew 7.2%, with of course a big increase here in Japan, that's up 17.2%. Total Asia was up 3.7%. Americas was up 11%, and actually France up 14.2%. So again, Hermes here showing why they are best in class, the best of the best, higher margins, and well, very, very high premium on the stock, especially compared to an LVMH or any other player for that matter. I still like LVMH. I think there is a lot of value to be found there because it's also one of the best companies around if you want exposure to the luxury market. But since it is so big, since it is so diversified, yes, they are more impacted when it comes to cyclicality than a company like Hermes, who's laser focused on a couple of specific things. So all in all, that's about it. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.